Hello, this is Randy Lindsay with Hawkeye Traders. A quick market update for you as we've been following these markets. Last week we talked about the breakout of consolidation. Now we can see very firm, a nice uptrend has been established. We have two nice green Hawkeye trend dots that have established the long trend. We've seen green buying volume staying consistent through the days, although we did have one day yesterday that closed lower than the open, but that close was still buying volume, but is lower than average. We can see that the average true range of the bars are still consistently at about a 132 points per day, which is huge by comparison to the pre-COVID-19 days. But it is what it is. So now we're looking at a continuation of that expansion on a continuation of a bullish reversal from the lows that we experienced here back in late March. Now, if we look at the volatility index itself compared to the S&P, you can see as volatility rose, the price dropped very dramatically. But now look at there's a very steady decrease down to a plateau and then a breakthrough and a continuation. So this is continued easing into the volatility index, and we're now starting to see volatilities down into the 30s, which before, that's almost from the 90s down into the 30s. That's a pretty marked decrease in the volatility, which means we're probably going to start seeing the price range drop and the volatility in the market start to subside somewhat. But we're right in the consolidation range. We had the first break, and then if we get right back into 3,000, you can see there's another supply zone that we need to get through there. So let's turn on our Hawkeye Zones tool on top of the charts to see where we're looking at. The Hawkeye Zones show us where our active supply and demand zones are. So a break of 28.73 to the long side will get us back up into the 3,000 range. And in this case, 30.3950 would be the target to the upside. If we fail to break a 28.7350, then 26.3450 or back down under 2600 will be the target to the downside. So that's about the same distance up or down from our current price levels, but we're looking at that as a continuation play. Right now, volume is still pointing to the upside. It is still declining overall, but we see a marked increase from the previous decline. It's starting to plateau. So if we continue to see this on the long term, the 2 days already gone full green, we need to see our heat map start to go dark. And if we see weekly buying returning to green, then we have signals to help us to try to capture this to the long side. That all comes in, then we're looking for a price which might correct back up into the previous highs that we had before the crash, if everything goes well. But earnings season is starting to come out. We have to see the damage that's being done by the corona shutdown. So let's see if the markets have the resilience it needs to stave off this virus, and the stimulus package and the money that's coming out to individual families to help through this crisis might continue to stimulate the economy back up into ranges which might be supported. But it's hard to juggle the two, especially with all the news that's coming out. So if you have your very own copy of Hawkeye, though, you'll be able to follow these daily as the price corrections. And so these updates won't be subject to whether I put a video out or not. You'll have the software yourself so that you can follow along on your own pace. So click the link below to find out more how you can get your very own copy of Hawkeye Tools. Thank you for your time.